while I would love for all of that to happen, I also know how to look at facts and read the math. And mathematically, it's nearly impossible for that to happen, in my view. So, the market, in my opinion, will eventually come to the conclusion that I've come to because they will start to unpack it and see the math as well. And I believe gold's going much, much higher. I mean, I believe both gold and Bitcoin. My projection for next year, kind of calendar 2025 year end, gold will probably be at $4,000 and Bitcoin will probably be at 150 or 200,000 dollars. They'll both be up substantially from where we are today.
The U.S. national debt has reached an alarming $35 trillion, with interest payments now surpassing the country's defense budget, historically its largest discretionary expenditure. Given the enormity of the debt, traditional solutions, such as billionaire taxes, are unlikely to produce significant results. Lawrence Lepard, managing partner of Equity Management Associates, argues that in light of the growing debt and the limitations of the current fiat currency system, the U.S. may need to consider transitioning to a more stable monetary system, with gold revaluation emerging as a potential solution. This strategy could address the national debt while expanding the money supply without resorting to the risks of excessive fiat money printing. Gold revaluation, which involves periodically adjusting the price of gold, could dramatically increase the value of a country's gold reserves, providing a financial cushion to manage debt. The U.S. government holds around 261 million ounces of gold, and revaluing it, potentially up to $20,000 per ounce, could unlock significant financial resources. By doing so, the U.S. could reduce a substantial portion of its national debt, marking it down realistically without resorting to drastic measures like debt forgiveness. Historically, gold revaluation has been used as an economic tool, most notably during the Great Depression, when President Franklin D. Roosevelt raised the price of gold by 40% to help stabilize the economy. While the benefits of revaluing gold are considerable, Lawrence Lepard acknowledges that this approach has challenges. A significant increase in gold prices could lead to short-term inflationary pressures, as the surge in gold value may have ripple effects throughout the global financial system, potentially causing price hikes in goods and services. Despite these initial concerns, proponents of gold revaluation argue that the inflationary shock would be temporary, with the economy stabilizing in the longer term. Ultimately, revaluing gold could provide a more stable currency, lower inflation, and a more balanced fiscal system, presenting a potential solution to the U.S. debt crisis without relying on the risks associated with the expansion of fiat currency. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
Look at what Roosevelt did in the 30s, right? He didn't go get a congressional approval to grab the gold. He just did it. He just said, I'm issuing an executive order, I'm grabbing the gold and I'm repricing it. Boom, done. So, is this, in theory, the monetary system is controlled by, the Constitution and delegates the responsibility to Congress. But in practice, and says it can only be gold and silver. Of course, we've walked all over that. We don't do that anymore. And in practice, Roosevelt took it unto himself and did it. And when tested by the Supreme Court, they upheld what he did. What I believe should happen and this is where I hope Percent, is intelligent about all this. We really need to do a monetary reset. The guy who's actually been talking about this the loudest and has the best plan is Luke Gromen, who's a macro analyst. We really need to. We've got too much debt. And we can't pay it all back. And I'm sure most of your listeners are familiar with the concept of a debt jubilee, which was used in biblical and Babylonian times. When the debt got too large, they just forgave it all and started over again. And we could do something similar. We could establish a new currency, back it with a sound backing, whether it be gold or Bitcoin or some combination of the two, and say, the old currency, it's devalued in terms of the new currency, and then suddenly the old debt would become manageable. That's an entirely possible path, and it would be a fairer and more balanced and less chaotic path than the one that we're on, which is, let's just keep running up the deficits until we can't do it anymore and the whole thing collapses. Or we print money and we either collapse because we stop printing money and we have deflation and we have a depression-like event, or we continue printing money and it compounds on itself and eventually that becomes super high inflation. And we get a Gresham's Law event. So All of that, both of those paths are messy paths. Debt down in real terms. You would say, I mean, as Luke's example would be, we have 261 million ounces of gold, or they believe we do, and we might. You would say suddenly the U.S. is going to buy and sell gold at $20,000 an ounce, or every $1,000 you mark it up, no, $4,000, you get $1 trillion into the TGA, and you use that to pay down the debt, and we get the debt to a manageable level again. If you mark gold up that much, that would be a very inflationary event in worldwide terms. And so the US would suffer pretty severe one-time inflation. I think the bottom line is there's really no way out of this without pain. I mean, it's kind of like being an alcoholic. I mean, we've been drinking too much, dealing with a hangover by drinking more, and we got to stop drinking. And that's a painful process, stopping drinking. But guess what? If you stop drinking and reset to a sound money standard, then we'll go back to having a normal life and a normal economy, and inflation won't be the big problem that it is. And we'll be able to meet our commitments, and there won't be all the political strife and the wealth inequality. I mean, all the problems that we're solving from right now, in my opinion, emanate from the issue of having an unsound currency, and that started in 71.
Gold prices have recently experienced a notable setback, dropping over $80 or 3.00% after 5 consecutive days of gains last week. This decline aligns with decreased geopolitical tensions, particularly following discussions of a potential ceasefire between Israel and Lebanon. Despite the short-term pullback, gold remains up 27.82% year-to-date and is on track for its largest annual gain since 2010. Lawrence Lepard remains optimistic about gold's future, predicting prices to rise to $4,000 per ounce by the end of 2025. Lepard attributes this potential surge to a broader global shift towards sound money assets like gold, as investors seek safe haven investments amidst growing economic uncertainties. Lepard's forecast for gold is based on historical trends and current global financial challenges, particularly the possibility of extensive monetary expansion by the U.S. government. He argues that such policies will likely lead to higher inflation and the devaluation of fiat currencies, driving greater demand for tangible assets like gold. Additionally, Lepard anticipates significant growth for Bitcoin, positioning both gold and Bitcoin as key assets in a global economy increasingly marked by fiscal instability, inflationary pressures, and a growing need for alternative stores of value to protect wealth from the effects of currency devaluation.
I think that's probably a piece of what's going on in gold today, but I actually think the bigger piece is the hopeful and I would call somewhat fantasy-like belief that Scott Bessent is going to work miracles, and that the Elon and Vivek Doge, Department of Government Efficiency, are going to be able to cut expenses, and that we're going to just get everything back, and it's going to be great. We're going to have a really good economy and low inflation, and everything's going to work. And look, while I would love for all of that to happen, I also know how to look at facts and read the math. And mathematically, it's nearly impossible for that to happen, in my view. In my opinion, we'll eventually come to the conclusion that I've come to, because they will start to unpack it and see the math as well. And I believe gold's going much, much higher. I mean, I believe both gold and Bitcoin. My projection for next year, kind of calendar 2025 year end, gold will probably be at $4,000, and Bitcoin will probably be at 150 or 200,000 dollars. They'll both be up substantially from where we are today, and gold stocks will take off. The real cheap asset right now are gold stocks. I mean, as I'm sure you're aware, and you sit in Vancouver, I mean, they just haven't gotten that much love. I mean, gold was up 20 or 30% this year. The stocks are up a similar amount. Typically, the stocks, multiply the return on the metal by 2 to 3x. So gold up 10%, stocks up 20 to 30. That hasn't happened. The reason that hasn't happened is that people still don't believe the $2,600 gold price is sustainable. They think Bloomberg consensus estimates are that it's coming back down to 2050. My view is it's going to 4,000. One of us is going to be right. If I'm right, the gold stocks are going to go a lot higher in the next year, which is obviously what I'm betting on. Earlier this year, when gold broke out in March, in March, gold went through 2070. And Bitcoin was just sitting there, and I had all my Bitcoin friends saying, "Hey, what the hell's going on? You guys are crushing us." And I said, "No, no, no, you're very happy this is happening, because Bitcoin usually moves with a lag. Gold is really, really good at smelling and sniffing out monetary debasement. And the
Interesting.
reason gold is backing off right now is it thinks that maybe Besant's going to solve it, and they're not going to have to do the monetary debasement. And what I'm here to tell you is that my belief, strong belief, looked at the math, looking at it carefully, is that they can't solve it. They can maybe take the edge off it, make things a little bit better, and that's probably a good thing for the world because we don't want a messy, economy. We don't want anything to crater and have another great financial crisis. But they can't really solve it, and so ultimately, we're going to have higher inflation, and then we're going to, as that continues, there's going to be a lot of political outcry. The Fed, I think the Fed is really losing its grip on things. I think the Fed's under a lot of fire. There's a book out that I would highly recommend to people, and you as well, David, called "The Lords of Easy Finance" or "The Lords of Easy Money" by Chris Leonard. So here's a guy who is a Wall Street Journal reporter, very mainstream, nothing controversial about this guy. And he wrote this book that is actually a devastating criticism of the Fed and how out of control it is and how it creates these cycles and how they blew the call on so much of this stuff. And so he wrote it and he said all those things. He said them very polite way. My book says the same stuff, but not so politely. He got positive reviews from, the New York Times, the Financial Times, the Wall Street Journal. They were all like, what an amazing analysis. And so, I think the Fed is in a lot of trouble. And I think that, there is going to have to, we are, the problem we are encountering, we have serious monetary issues going on in this world right now. And that's going to, I think, become increasingly apparent, and we're going to have to address them.
Given the US's escalating national debt and mounting financial pressures, revaluing gold could offer a significant solution by reducing the real value of the debt without resorting to controversial fiscal measures such as tax increases or austerity. By substantially raising the value of its gold reserves, the U.S. could effectively decrease its debt burden, restore confidence in the U.S. dollar, and stabilize its currency to strengthen its financial standing. However, this strategy would likely lead to short-term inflationary pressures, as the sharp increase in gold prices would ripple through the global economy, causing price hikes in goods and services and potentially creating market volatility. In the long term, such a shift could have broader implications for the global financial system, positioning gold as a more central asset in maintaining currency stability and wealth preservation and reshaping how countries manage monetary policy. Please share your thoughts on Lepard's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.